So once again, a hearty welcome to all of the students who are there on this platform who have joined our webinar on career opportunities in the insurance sector. I once again welcome you all on behalf of our academy. So you can see the beautiful background of our campus, 32 acres of campus we have at Mumbai Pune highway, and we are there from last we come into existence in 1980, December 16th, and it was established under the aegis of Ministry of Finance, Government of India by public sector life insurance and non-life insurance companies in India. And we are very fortunate to have a very reputed governing board from the members of the ministry, the chairman, managing directors of the public sector insurance companies, top academicians and the professionals. So we are blessed to have a very reputed and very powerful governing board at our academy. So what really we can see here, we can see some boats are moving down the stream and one boat all of a sudden is take a back turn and is going back. So as a layman, as a student, we are there on this platform. Can you go to the chat box and write why this one boat is going back and rest of the boats are going down the stream? So you can go to the chat box, write your comment over there. So why one boat is going upstream and rest of the 5 boats are going down the stream? Yes. Yes, you're right. Because that boat which is going back can foresee that there is a risk ahead. There is a fall there and they may not survive that fall. So knowing the risk, assessing the risk and taking a wise decision according to the information you have gathered from that is very important. And we correlate that with why we have organized this seminar is also related to that also, with added information about one of the sector which is very key sector, not only for the students, but also for the economy of our country. Because we are playing as an insurance industry, we are with a long-term investment and short-term investment, we are playing a very key role in the development of the economy in India. So with added information about the industry, yes, we can take a wise decision like this boat has taken a wise decision, it's going back. So what we can see right here, as Sir talked about just where Venugopal Sir talked about that is still at the month of February, we are witnessing heavy snowfall in the northern part of our country. So what is there we can see? We can see yes, we can see our iceberg over there. But what as an individual, as a person who is witnessing that, he or she can see only the tip of the iceberg. But what is beneath that? The part which we cannot see. And as a risk institutions which we are imparting the knowledge about how to assess the risk. This is what as a risk assessor we from gathering the information about the event, we can assess the risk, we take the wise decision according to that. So basically, what is a risk? Risk is a deviation for the desired outcome. I want to cross a road on a busy highway, whether I can be able to go from one side of highway to the other side. So my destination is crossing the highway. So whether I would be able to attain that, I would be able to cross that highway which I want to cross. So my desired outcome is going other side of the highway. But risk is in between that. Maybe a high car which is dashing there, it can dash me out, it can hit me. So that is the risk which is there. So I can assess that I can see right, I can see left, I can see that a car is coming very speedily, so I can wait, let the car move on, then I will cross the highway. So according to that, I can take a wise decision. So as an individual, what is the role for us? We have to identify and accordingly we have to assess the risk. Yes, this is the risk. Which are the elements of the risk which are there? And accordingly, we can take a decision, we can prevent it, we can reduce it, or the risk is very low and the frequency is high. Yes, we can retain that, or If the intensity is very higher and the frequency is low, in that scenario, we can pass on this risk to the insurance company, the big insurance companies. So basically, insurance is what? Insurance is a risk management tool where we as an individual, we can transfer our risk to the insurance companies, and as an entity, the insurance companies retain this risk. So why insurance? Why we need insurance? Why we require insurance? As sir has said at the beginning only, right, life is full of uncertainties. We never know what will happen. Even we encounter the same. We opened the registration for today's webinar for some 1 week earlier, but what we encountered yesterday evening, that when the students were trying to register in, we have 3 columns in the registration. We have your name, we have your email IDs, and the third one was your name of the institution. But suddenly, all of a sudden, when the students were trying to write their email IDs, that column was not, the message was flashing that this column can only take the numeric values. So the students cannot register for that webinar also yesterday. So we never know what will happen next. I'm talking to you, even the network will go off, the lights will shut off. We don't know anything about that. What will happen? So life is full of uncertainties. And if you remove the first of life and the last word of life, that is, you remove L and E. So only what remains is if. So life is full of uncertainties, and if it will happen, if it may not happen. So as an insurance, what we are insuring? We are insuring a pure risk. Whether it will be a loss or no loss. Even there will be a loss or there won't be any loss. So we are insuring a pure risk. As sir said in the beginning, living too short is a risk, because if the breadwinner of the families goes out of the system, what will happen to the family? The person who is day in day out working and financing the needs of his family, he's out of the system. Who will take care of that family? So that family requires some insurance, the life insurance. Living too long is also a problem now. With the mortality rate has come down, the people are living longer with, thanks to the medical assistance, thanks to the knowledge, the more information, thanks to also the many policies taken out by the government for Swachh Bharat Yojana, all these, and the insurance regulator also come out with the schemes like wellness programs. So a lot of people are adhering to that philosophy of leading a very healthy life. So what will happen in that scenario? The people will live longer and longer. So do we have the resources, the financial resources to lead that longer life? The person is living 80, 85, 90. Do we have the resources to finance that that longer period of life? So we require the annuity products, we require the pension products for that. And as an insurance companies, we do provide the annuity products and living too well. And this today, when we talk about that, we as Indians, demographically we are young. A lot of younger population is there in India. We have young brains with a lot of energy, and they want to invest on themselves. So they want a very good life to lead. And for that, we have products like, we have the wellness products, we have the periodic payments products that at the end of 3 years, 4 years, 5 years, we get the products. Yes, I can see that I want to finance my daughter's education. I want to finance my son's marriage. So we have the products accordingly that will take care of the finances of my daughter's education, that will take care of my finances of my son's marriage. So all is there in the kitty of insurance companies. We have the products for general insurance also, like in the budget only, when the finance minister, Madam Sitharaman, has come out with the surety bonds. And for that, the insurance companies, the general insurance companies, big general insurance companies are there to as they will work as a catalyst to empower the big manufacturing companies to take the decisions. They don't have to worry about the risk of being to encounter the risk, because they have the backing of the surety bonds and which the insurance companies are there to play their parts. So as we just spoken about, what is insurance? Insurance, the transfer of risk from an individual to a larger entity. So who is the individual? It can be me, it can be you, it can be you as a student. I can understand that you may be driving your own bikes, scooties, your cars. So you must be having an insurance for that. So you are an individual for that, and the insurance company from where you have taken the insurance for your two-wheeler, four-wheeler, that is the insurance companies. So it's a process of transferring the risk to a person who can bear such risk. So who can bear that risk? A big risk. Insurance company. So we have transferred the risk from individuals. So all the individuals having the similar risk, they transferred their risk to a big entity, that is the insurance company. And that is why you must have heard, because I can find out from the registration that a lot of the students have the background of commerce. So maybe in a commerce they have the subject of insurance. So you must have heard about the term pooling of risk. Even in India, in our culture also, earlier ages, now we have a nuclear families. Earlier we have to have the joint families. Four sons are there, father is there. If something happens to the younger son, all the other three brothers and the father will take care of the family of that son. So basically, what they have done, there's a pooling of risk. So as an insurance company, all the similar risk being transferred from by the individuals, and insurance companies take care of that altogether the risk. So in this scenario, the individual who is transferred the risk is called the insured, and the insurance companies to whom the risk has been transferred are the insurers, the big insurance. My next difficulty will talk about how many insurance companies are there. So in the meantime, when she will talk about that, please make up your mind. It's a poll for you. How many life insurance companies are there working in India? How many general insurance companies are working in India? And how many standalone health insurance companies are working in India? Please, it's a poll for you. You can go to the chat box, write how many life insurance companies are there in India, how many general insurance companies are in India, and how many standalone health insurance companies are there in India. So what are the different types of insurance? So we have talked about life insurance. Life insurance talks about the human life, where as an individual, I take insurance for myself. I can take insurance for my spouse. I can also take insurance on the life of my son, my daughter, my parents. I can have an annuity plan for them. General insurance companies. So what is not covered in life is altogether being insured by a general insurance, non-life insurance companies. So it's a very huge line of businesses are there in life insurance, general insurance. So you can have credit, you have a car, motor insurance, you have a fire insurance, you have a health insurance, you name it, everything is there to be insured. Then as the sector has grown up, the regulator says that we have to focus on health insurance, because this sector as a health insurance is really growing up. And you can understand, you can make out, you have seen the scenario after this COVID-19 that a lot of the people are going for health insurance. There was a surge in the market. Everyone was looking for the health insurance products, and there's a humongous growth in health insurance once we encounter this pandemic COVID-19. So there is a surge in the market. Everybody is looking for the health insurance product, and it's zoomed like anything. Thanks to the insurance company, basically how we decide the premium. Historically, we have the data with us. Accordingly, we decide the premium for our general insurance product, our health insurance product, our life insurance product. But for this COVID-19, all the insurance companies, whether they are life insurance companies or health insurance companies, they don't have the data, historical data with them. Even though for the benefit of for the masses, for the Indian society, they have come out with the products for COVID-19. So thanks to the insurance companies, they were there when the society required them the most. They have taken the risk of coming out with the product in this scenario also. And you will not believe that within this financial year, in the first quarter itself, after we faced the second wave of this pandemic, the claim outgo in health insurance as well as the life insurance was in first quarter itself was more than what they had encountered in the previous financial year. So the outgo was a humongous, but yes, we are always as an insurance sector, we are always there to support the society. So what insurance are doing, they are helping in managing the risk. It helps in mitigating the losses. So how does an insurance company compensate the risk? So as we discussed earlier, the people with similar risk, they come together, they take an insurance policy for themselves from a big entity. That is the insurance company. So accordingly, it's a pooling of risk. All the people, say 1,000 people come together, they get insured for a particular a particular peril. It can be a fire, or it can be a theft, or it can be a burglary, or it can be a death. So that 10,000 people have taken a policy for that particular peril, and if say out of that 10,000, some 10 people during that 1 year they encountered the losses. So all the people who have come together and as a consideration, as a premium, they have contributed the kitty. From that, the money will be given to that people who encountered the losses in that duration of the policy. So basically, what as an insurance company they are doing, they are compensating the economic losses. They don't compensate the non-economic part of that. So only what the losses which can be quantifiable. And we talked about earlier also that pure risk, where we don't insure the speculative risk. We only insure the pure risk and which can be quantifiable. That is, we cover the economic losses. Insurance companies can compensate only economic losses. So insurance work on the principle of protection of economic losses, loss of a valuable tangible assets. So we are putting a value to that. An asset is a valuable property of the owner, because I have owned it. I have a car, I have a mobile, I have a laptop. These are the assets I own, and they are valuable for me. And what about the human life? Can we quantify that? How valuable an individual I am for my family? Can it be valued? Can we quantify that? You purchase a car, you paid the price for that, you have the bill for that. That is, you can value that. But what about the human life? Can we value that? Can we put some cost to that? And that is where the life insurance use the concept of human life value. So if the person is of 25 years of age, so for the next 35 years or 40 years, he will be earning. He will be earning for next 35 years, 40 years. They will take into accounts the timely promotions he will be getting, the increments he will be getting, and also his personal expenses. And they will discount it with the inflation part, and they will arrive at the human life value for that person. So yes, through that human life value principle, we can value, we as insurance companies, they do put value to that individual who is seeking a life insurance protection cover for himself. So this is how we quantify the human life on his job, his capacity to earn, his skills, qualifications, and the company is working. Human life value, the benefits are paid on early death. We spoke about that, the risk of dying early, on survival of the term of the end of the term, risk of living too long or periodic payment, or risk of living too well. So this is how the life insurance annuities are working. We talk about that. General insurance companies, it covers non-human objects like animals, agriculture, crops, goods, factories, cars, etc. You name it, it's there. A lot of new segments are also coming up. 2-3 years back, the drones are coming up. We do insure the drones. now in the budget itself, when Madam FM talk about that surety bonds, insurance companies are there to give the protection for that. For the last 2 years, we are what we are doing, we are only confined to this laptop or a mobile phones to interact with our professors. Our parents are working from home. The concept is there. So what we are doing, we are exposed to the cyber risk. So who is there to take care of that risk? Insurance companies. So general insurance companies are there to take care of that. In some countries, non-life insurance is also known as property and casualty insurance. It covers losses due to fraud, burglary, negligence by professionals. General companies, basically, the contracts are for a very short period of time. So say like last year we had IPL in India, but due to the pandemic, some of the matches, I think some matches after 24 or some matches were again we shut down the IPL in India. We take it to the Gulf part. So there was a losses. That particular event was insured with the insurance companies. So the loss was there for that particular event, and insurance companies make the loss good. So you name it, insurance companies are there. So it's so that is why I shared that the iceberg with you. Only what we can see, it's only a tip. So bigger part is beneath that waters. So field is humongous. And what we are seeing here, so when we talk about the health insurance, we spoke about the health insurance also, that the standalone companies have come up. They are doing excellent business. What are the when we talk about the insurance industry, it's still growing. We talk about the sunrise industry as an insurance, but what are the growth drivers? Economic revival. Yes, sir said that economy is reviving. Even the economic survey we had, we had in 2021, we had 9.2%. The economy has growth in real terms. And prior to that, the previous financial year, it was a degrowth of 7.3%. And even the World Banks, the IMFs are talking about that for the next 3 years, India will be the fastest growing economy in the world. During the speech on budget speech, Madam FM talked about that the GST collection for the month of January 2022. She said it was 1 crore 49 lakh crores rupees. So when the GST, and it is the highest we've had the GST collections throughout when the GST come into existence. So what are the indicators this is showing? That this economy is growing, economy is reviving. The light is on the other side of the tunnel. Risk awareness. Thanks to this COVID, everybody is talking about risk. Everybody is talking about insurance. Even when we had the interview, the personal interviews for our existing batch, the students were talking about, they know about insurance. They can see their family members, their relatives, the people who are there in the societies. They are going for insurance. They are there because the cost of medical expenses has gone up. Thanks to this. Fortunately, unfortunately, to this COVID, the people there's awareness about the insurance. But what we have to do right now, yes, we have to go and buy the insurance. And I request the students on the other side also, now you have come out the importance of insurance. Ask the people who are nearby you to go and buy the insurance. Government has come out with many social security schemes. The PMSBY is there, PMJJBY is there, Atal Pension Yojana is there. So ask your people, the people who are from the downtrodden society, please ask them to go and purchase those the insurance coverage for them, so they can help their family members. And yes, there is acceleration in the digitization. For the last 2 years, even a small kid who goes to the for a prep or for his initial studies, the three years old kid, when he joins the schools, the preparatory schools, he's exposed to that digitization. He's seeing, he's communicating with the teachers on this mobile phones or the laptops. So even that Byju's have come out with this for programs from 1 to 4, then 5 to 12 standard. So they're exposed from their early age. The people are exposed to that. And that is where the insurance companies are playing a big role. The digital companies are playing a big role, and insurance companies and the digital companies are being a partner for accelerating the growth in insurance sector. What they are doing it, they are creating an awareness. They are helping in creating the by making the products more affordable and also accessible. So we, at the click of our mouse, we can access the products. We can go through the bouquet of projects. We can what are the products which are available, which are of my requirement. I can assess that and I can buy it just by clicking of a mouse. Demographic dividend, we talk about that also. We are a growing industry. We are a growing society. We are a society which, on an average, we talk about that our age is 28 years only. So what that reflects that we have a people who are younger. Younger means we are not dependents. We'll be earning. We'll giving back to the society. We'll be having more disposable income with us. Can put more into the economy. So economy will be revived. So this is a good scenario, picture for the industry also. So talk about that natural calamities are on a higher side. We can see that even the western part of India, we don't used to have encounter the cyclones. Even now, the western part of India is also encountering that. We have the snowfall right now going on. We have the floods, the Chennai flood, the Kerala floods. The natural calamities are growing. The said that sea level, water level is growing up. So we as insurance companies, we are there to take care of that risk also. The few emerging risks are coming up. We can see that cyber risk is coming up. For last 2-3 years back, IAD also come out with to cover the title insurance also. So some of the risks which were not earlier, now they have come up. And yes, we have a large workforce which is engaged in informal sector, and for them we required financial protection. So we have to cater to that informal sector, because for the formal sector we have the government, we have the big entities who can take care of their employees. But for what will be for this informal sectors? For that we require the insurance companies, we require the group insurance, we require the retail insurance for them. And yes, we have a huge mortality gap which is there in India. I was going through a report, Swiss Re report 2020, it was July 2020 report that says yes, 83% we have a insurance mortality protection gap in India. And when we quantify that, in absolute term, it is $6.5 trillion US, which comes to be around 14.5 times the annual income of a household. So we are still not properly insured. We are still underinsured. So there is a huge field which as an insurance company we have to get into it. We talk about the insurance penetration, it is 4.2% only. When we talk about the insurance densities, it's only $78 US. So the field is huge, and that is why we require insurance companies to take care of that, because government cannot go everywhere. So now we have as an insurance industry, we have taken the load on ourselves that yes, we will take care of that.